the 17th, and we're midway through the week. We do have a bit of news today, nothing really too crazy. We got the core retail sales month over month and retail sales month over month today, and you can see based off of where the market's trading at right now, we're down a couple of ticks, right? A couple points. But let's go ahead and jump right into this. You can see on the monthly, relatively unchanged. We're back down here at the 67, so that same level is drawing the market again, right? Kind of what we expected from yesterday, where we expected the market to go. Got there in the overnight session, right? Cash session kind of rallied into the close, and it looks like in the overnight session they were able to gain the supply that they needed to kind of push it down. But so far, relatively on the monthly, there's no change. We still maintain below that 48.20, which is relatively weak as far as momentum traders go. So you get those momentum traders kind of getting stopped out every time that the market does peak lower. More and more momentum traders are getting stopped out. Switching over here to the weekly, you can see we still remain in this weekly balance, and that's really the big thing that we want to monitor. This low side, or the key point on the low side, was that T2 weekly low, where we got the momentum at the bottom, and then the market rallied from that point. So we got short covering from that point, and so far we're trading above it. So should we see acceptance below that 47.68, most likely that will be the target for the market to trade back down below that 35, 36 area in order to give some of these momentum traders, right? And remember that momentum traders can be intraday momentum traders, they can be intra-week momentum traders, they can be monthly momentum traders, right? It just depends on their time frame. But there is momentum traders on all time frames. I know that's kind of maybe a new concept to some of you. Most people just are kind of fixated on the daily time frame, and then intraday, where they're like, oh, momentum's on a 1 minute chart. But no, there can be momentum traders on every time frame. And so this T2 week, we saw momentum traders get stuck down here at the low and then get covered. And so we have the middle of our balance, which is that 68. So should we see acceptance below that 68, the market should move lower towards that 35 in order to give some of these momentum traders that have been holding, that aren't stopped out, an opportunity to either cover their position or double down and re-offer their position. Now we have that 9 moving average on the weekly chart. I'm not a big moving average person, but one of my buddies is, and that's how he trades. So I added them to my chart just to start monitoring them, and that's right below at that 47.24. So that could be an area where we would see maybe some action in between our 35 and that 24 area. Could be an action point. And I know our friends over at Shadow Trader, Peter Resnicek and his crew, are big advocates of the exponential moving averages as well. So definitely something I think worth paying attention to. Now switching over here to the daily chart, we can see that we're one time framing down now. What's this daily chart look all weird? Oh, because it's a holiday. Yeah, okay. So we have this holiday period here, so this is kind of ignoring, but I would say that yesterday was a -4 day, right? It just isn't showing up like that because of that holiday, but yesterday we're going to treat as a -4 day. So below that 47.98, which was the settle from yesterday, 98.50, I believe, will be our -4. We don't really want to be long above that. That would kind of indicate that maybe some momentum traders are uh, coming back into the market and probably get squeezed up to the upside. Now, a couple key points from yesterday, and remember we're trading at 66.50 here. So we're actually trading down here. But some key things is if we can't close this gap, and especially if we can't close this gap and then we get back below this 68, you can see where the liquidity zone's at here, and I could even just draw it on the chart for us. It's from about 4760 to about 4767. So this is kind of the liquidity zone, and there's like daily single prints here that we're seeing on the chart. And so this could be the first area where we see buyers start to step in or to cover their positions, right? Because you figure momentum traders here, they get stopped out here. If we come back down into that area and we see buyers, the market could rally and return back, and that target would be yesterday's settle. Now, if we get acceptance below that level, then the opportunity comes back down like we talked about to that 30 25 area. So like I said, we're going to treat yesterday like a -4 day. And the reason that we're doing that as we switch to the profiles, right, if we're ignoring this day here, or if we merge it with the previous day, you can see we get the open for this day, the close is here, the low and the high, and then yesterday we have our open here, our close here, our high, and our low. So all 4 data points are lower, which would give us a -4 day. Okay, and that's why I'm doing that. Now, getting into a little bit of review from yesterday, right? Yesterday worked out play number 2 pretty much like a charm. We did get a move lower initially, so it's more of a go with. We had talked about that 6 to 4 level yesterday, traded up to 550 and then ended up rolling over, but B period opened up, rallied back into yesterday's value just to try to check to see if, if they wanted to see acceptance up here. Was unable to find acceptance, ran out of steam, ran out of buyers, traded lower, a little bit lower, and then kind of rallied on the close, and we get this close near that 4,800, very mechanical level. So a lot of people, I think, still cautiously short yesterday, and more or less it looked like a B profile, but a little bit of excess indicates that there was some selling in there and it wasn't just pure liquidation. Now, switching on to today's or the overnight session, we can see that overnight inventory is 100% short, right? Trading 100% below that settle, and we're actually trading near that low, right at that 67.50 level. And so today, what we're kind of expecting, or what we'll be imploring, is some gap rules. Gap rules will be in play. Most likely, we do still have a little bit of time until the market opens up. So if we get a rally back into the previous day's range, then anything's possible. But it's looking like play number 2, right, which is to go with this previous value. So if we rally up here, and like I said, we're treating this as a -4 day. So anything above this settle, we don't want to be short. Okay. If we get above that settle, we definitely don't want to be short. So if we look for some levels from yesterday where we kind of expect to see some selling, we can see some mechanical levels in yesterday's session, right? This previous high, this high right here. But it looks like the selling comes in right around that 90. So if we were to get that rally back in, close that gap, I'm going to be looking to get short around that 90, 92 area, and try to take it back down to the previous day's low and then back down towards that 67. Now, with the overnight having this very large distribution, the odds are high that we do visit the overnight point of control, which would still maintain the gap, and that's about 76, 78 area. So rally back up to that 76 area is definitely a shortable option. Back down to this 67. So you're looking at about 9 points there. Break below that, and like I said, there's some single prints here below, down towards that 54. That would be the real target. So If we get short this 76, take one off 67, and then look to take it back down to these singles. Now, the 34, we talked about this 34 to 25 area. That would be if we get a severe liquidation or a continued liquidation. I am not sure really if we're going to get that intraday or how that's really going to play out. It looks like they've been making a lot of moves in the Globex sessions, honestly. So we definitely want to be aware of that because sometimes if they are making these moves in the Globex session, it can mean that weaker hands or short money is trying to take control of the market. And then if a larger player steps in, they can really kind of run over these short money players. So we definitely want to be just aware of that. And some of those areas where we could see is that 54 and then that 34 to 25 where we could see some large money step in and catch a bid. So that's what I'm saying. If we get to those areas, that's where we want to be exercising a little bit of caution, taking off some profits, things like that. Other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan, and I will see you guys tomorrow.